Welcome back. You're watching Buy Now, Sell Now, and it's Antony Waste on the show, and we'll be focusing on the Q4 numbers. A big set of numbers, profitability seen under pressure. There's an exceptional gain of 24 crores that the company has reported, and record refused to arrive fuel sales, and obviously there's an impact of prolonged monsoon on the agri demand that we can see. Joining us now is Mr. N.G. Iyer, Chief Financial Officer, Antony Waste Handling. Hi, morning, Mr. Iyer, and welcome to the show. Let's just
Good
understand
morning.
the reason behind this mixed set of numbers. Where did you see the pressure coming in from?
Uh, so the numbers are actually positive. The exceptional item that we are referring to was in the year ago period. So last year we received around 24 crores of exceptional gains from an arbitration settlement. So if you take out the exceptional gains of last year on a year-on-year basis, the top line is up by around 19% for the quarter. The bottom line is actually up by around 67%. My profit before exceptional tax items and taxes is up by around 26%. So on the top line, the growth is robust, led by volumes growth. EBITDA is strong at 22% for us for the entire year. Profit after taxes before exceptional items of last year, it stands at around 26% year-on-year growth. So the numbers are pretty healthy on that aspect.
Okay, Mr. Iyer, numbers are pretty healthy for fourth quarter, considering that we strip off the one-off items that you registered in the fourth quarter. Shesha, this side, will this kind of growth sustain the revenue growth that you have reported in FY26 and for the fourth quarter? Is that sustainable in FY27?
Yeah. So yes, the numbers are sustainable and will grow slightly more, mainly driven by the new contracts that we bagged. The two AP projects have yet to start construction phase. The Atkoli pre-processing plant is yet to start delivering, and the two large CNT contracts that the company bagged the last year will start delivering from the second quarter of the current financial year. So the top line growth should be around 12 to 15% comfortably for us. Add to that, the margin profile is likely to be remaining healthy in the 21 to 22% for us. So the outlook remains stable and with a slight positive upturn for us.
Right. Any update on the order pipeline that you can talk about?
Uh, so currently our order book position is around 18,000 crores. That's a lifetime high for the company. And the order pipeline in that sense are the new contracts that we're talking about. There are three more contracts that the company is bidding for. We are still in the letter of intent stage, so we will be able to get more clarity as and when the letter contract tenders out.
All right. Since you spoke about revenue guidance, also wanted your thoughts on the margin guidance. If you can share with us, you have reported margins in the range of 20 to 21% over the last 3 years. Any levers to expand margins in FY27 that you foresee?
Yeah, so the margins are slightly would be under pressure in the interim period, mainly because of the Luke's prices, which is a critical input for my profile, is likely to be hit. But bulk of my revenues have an escalation metric, so there will be timing mismatch. So our margins will always remain in the range of around 22%, around plus or minus maybe 100 bips. So our target is to hold on to the margins, work on the improving the margin profile a bit, despite the cost pressures that we are witnessing because of the Iran war.
All right. Any specific impact that you can quantify and tell us about the prolonged monsoon that we can see extending further?
It's a small bit of an impact for us because sale of compost is the only line item which gets impacted because of the prolonged monsoon. I mean, that was down by around 16% for us. But given the fact that the monsoon is likely to start late in the current financial year, we are led to assume and read that the monsoon is likely to be stretched out. So we will be able to offload more quantity of compost in FY27 as compared to FY26.
Understood. So that's as far as the impact of monsoon is concerned. But Mr. Iyer, I wanted your thoughts on two geographies. One in Maharashtra, if there are any fresh order wins either from BMC or other agencies. And second, I believe you were also working on a project in Andhra Pradesh. What is the update on that front and any new projects that are lined up in these two geographies?
So the kind of project that we already bagged in Maharashtra also adds to our footprint in the existing geography. The two new collection and transportation contracts together should add around at least 100 crores annually as revenue for the next 110 years. The Atkoli project is a 10-year project, which is in Thane, that should add at least 68 crores of capital reimbursement in the year first itself. And our ongoing projects are stable growth for us. So that is a very good profile for us as a footprint in Maharashtra goes. The two large Andhra Pradesh projects that we bagged in the cities of Kadapa and Kurnool are waste to energy projects, wherein JFE has taken a 25% stake. It's a Fortune 500 company. And these are 20-year projects, wherein we'll be setting up a 15 megawatt waste to energy projects in these two cities, And on an annualized basis, each of them will start contributing around 80 to 85 crores of revenue from FY29 onwards. So from July onwards, we'll see the construction happening. It's a 24-month construction phase. Post that, it's a 20-year project for us. So these are two large projects that we're getting on with. And there are other projects in the pipeline, as I mentioned, that should give us a good profile and a canvas to paint our growth strategy on.
Sure, Mr. Iyer. Strategic outlook really looks in place, and also key project wins across collection, transportation, processing, waste to energy, along with the merger of AG Enviro. I just wanted to understand any more benefits, incremental strengthening of your long-term strategy that we can see from this merger that you can talk about.
Yeah, so operationally now we have become a very strong company in the sense, I mean, if you look at the standalone company, the numbers per erstwhile was just around 40 odd crores of top line with a proportionate PAT. Now, if you're looking at the standalone numbers, that's like a 600 plus crore of top line with a respectable bottom line. So that gives me a very good balance sheet to bid for new projects. At a console level, my net debt to equity is 0.3x. So that for an infrastructure company, that gives me a lot of ability to go to the market, raise more debt for future projects. And that gives me a very enviable position in terms of raising funds for the new projects. So this merger really gives me the operational significance, operational maneuverability to leverage the existing profile to bid for more projects in the CNT domain.
Since we are talking about projects, Mr. Iyer also wanted your thoughts on the competitive intensity of municipality projects. Has competition intensified when it comes to pricing across these projects and bids?
So 61% of my cost for any conventional and transportation business is labor and fuel. So that is apples across the system. What brings us to the front is our operational expertise, because for the last 60 years, we have been doing nothing but working with machines and man. And that is our strength. We have around 12,000 employees. We have around 2,800 vehicles, which are specialized in nature. We are able to use them effectively. We are able to get up in the morning, get around 11,000 people excited to get into the garbage collection vehicles and run the routes. So our strength is much more enviable as compared to competitors. And what we bring as a solution to the clients is better. In the sense, if you look at the Swachh Bharat Sarvekshan survey of the clients that we work with, it's always in the top quartile in bulk of the scenario. So most of the cities benefit by working with a company like Antony as compared to our competitors.
All right, Mr. Iyer, thank you so much for taking your time out and answering all
Sure.
the questions. Thank you so much for joining in today.
Thank you.
Thanks.
Take care.
Okay, with that, it's time to slip into a short break. But post that, we'll be joined by Jugal Patel, our expert on the show. We'll be answering your stock-specific questions. And before we dive into the break, let's just flash our QR code on the screen so that you can scan it, get connected to our WhatsApp number, and there you can send across your questions. Write down the name of the stock, the price at which you bought it, and we'll get you a technical take after this break.